Welcome back. You're tuned into Chartbusters here on CNBC TV 18. Well, next earnings on our radar is Ask Automotive. The company reported a very, very good set of numbers in the past quarter. Margin expansion came about because of higher volumes and cost optimization initiatives. Mr. Kuldeep Singh Rathé, who is the CMD of the company, joins us on the show. Hi, sir. Good morning. And first of all, wishing you, your team, a very, very happy Diwali in advance. And hopefully the festivities are as good for the company in the second half of the year as well. Let's get to some numbers. First half of the year, you have grown by mid-20s. For the year, what kind of a revenue growth are you looking at? Point number one. And when you joined us earlier, you was hinting that at least you'll be seeing a 100 basis point improvement in margins, which is encouraging. You have already clocked 12.2% for the past quarter. What's the outlook for the second half of the year on an average for the year as well?
Good morning, and first of all, let me wish you, your team, and all the viewers of CNBC TV 18 a very, very happy and prosperous Diwali. Well, it has been a very, very good first half, as you have seen, but the more important thing is what will happen in the second half. And I'm very, very confident that the two-wheeler segment is going to perform very well, and I see a very good picture for the second half also.
You want to put a number? You want to put a number to that, sir? What kind of growth? I'm just looking at the two-wheeler industry. It's seeing a growth of close to around 12%. But your growth is far better than the two-wheeler industry. So for the year, on an average, what kind of growth with margins?
I will only say that we'll outperform the industry. I have
by
always meant we'll outperform at least by 50%.
All right, by 50%. So if the two-wheeler industry is growing at 12%, you will grow at 18% minimum. That's good enough for us. And, wish you a very happy Diwali as well. There's a lot of cheer in your voice as you speak.
Thank you. And we will also maintain the EBITDA margins that we have achieved, because now the economies of scale are coming.
Right.
Our Karoli plant is in good operation, where we had invested about 430 crores. And even our plant, and it has become EBITDA positive, at 45% capacity utilization. And our next plant, we are investing 200 crores in Bangalore, which we started only in March. I'm happy to announce that in the next quarter, we shall be commissioning it, and it will be going on stream.
All right, that is incredible, because you actually preempted my next question on Karoli itself, which turned EBITDA positive, and as a result of which your margins are at 12.2%. Yes. So when you say you will maintain these margins, will you maintain it at 12.2% itself, or as Bengaluru comes on stream, and you have the Sirsa plant as well?
No, Bengaluru will come in stream in the next financial year.
Okay, so by when do we see margins improve once all of these plants are, commissioned, including Sirsa plant, which will start contributing to revenue? What is the total potential revenue and margins?
Yes, you will see improvement in margins. Further improvement will improve in the next financial year.
How much further, sir?
Sir, I can't say now at this moment. Depends on what kinds of situation.
You must be having an aspiration, sir.
I'll not hesitate to meet you every quarter, number one.
Lovely.
Number two, that I feel I'm an optimist always. And I feel the two-wheeler segment, which has gone through very rough times for the last 4 years, it has bounced back. And with so much of the spending on the infrastructure by the government, which has to happen in the second half, I feel this will have a steady growth, the two-wheeler segment.
Okay,
so
all right.
I see a very good next year also.
Got it. All right. Give us a couple of more aspects from the JV you have with Aisin Group. I think you all were talking about 100 crores of revenues. As of now, what is it for this year? What kind of contribution will come from there? If you could tell us. And the second part is exports. I think they were around 4.5% to 5% of the total mix. But you're expecting that to improve as well. So for FY25, FY26, how do you see this contribution go up on both these two aspects, JV and exports?
Yes. So on the export front, this year, one of our key customers, they have problems in Europe. So they are in the process of inventory correction. Still, we are growing on the export front. But we feel the next financial year will be exceptionally good, because we have the orders from one of the customers for 75 crore orders, extra orders, which we have to start in January this year. So that will give a big boost to the exports next financial year. And as far as you said, the joint
JV.
venture JV with ISIN, the company has been successfully formed and will be launching the products in the next quarter. So you'll
All
see
right.
the results of the joint venture in the next financial.
So as promised, we'll speak to you in the next quarter for prognosis on how that is panning out and the revenue outlook out there as well. Mr. Rathi, just before we let you go, this 85% stake that you had has now come down to 78.9%. This is the promoter stake that I'm talking about. As per the minimum public shareholding norms, you have to bring it down to 75%. You've done an OFS of 6% already. By when do you intend to reduce your stake back to that 75%? And in what mode? Will that be a QIP? Will that be further selling? How does that plan happen?
See, I can't say because our debt levels, are very much under control. They are less than 1 year of EBITDA. This year also, after doing so much of expansion, and our debt equity is continuously reducing, From the time we listed, it was 0.49. In March, it was 0.42. And I think we should close at 0.35 or so around that. So that's debt levels are under control. And there is no hurry to offload the next 4% because still 2 years' time as per SEBI regulations.
All right, we take that point, and you've given us an indication that you're not looking to raise funds into the company because your debt is comfortable.
I don't need the funds, which is a good
All
part
right.
on this Diwali,
Yeah, wonderful. May you never need funds for the business. It will be self-sustaining, and then whatever you have to do, you do it via OFS itself. We'll keep an eye out on how that plans out. Wish you a very happy Diwali,
you
your
very
team,
much.
and all your family members as well. We slip into a short break.
Thank you very much.
With that, let's talk about some important programming note. We celebrate 25 years of excellence. That's CNBC TV18. We invite you to the most anticipated event of the year, the CNBC TV18 Global Leadership Summit. We bring together visionary policymakers. We have the Finance Minister herself, Nirmala Sitharaman, the RBI Governor, Shaktikanta Das. Then you have a bunch of industry leaders like HSBC India, Sitendra Dave. There is, of course, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders, as you can see on your screen. The roadmap for the next 25 years of growth for India will be charted along with global leadership. You don't want to miss this.